The crisis at the LBMA with silver could be coming to an end soon, but that does not necessarily mean that silver's bull run is over yet. I'll explain as we explore. That's right, silver has been taking a pretty big beating on Friday and the last trading day. By the time you see this video, who knows where silver's price will be? But nonetheless, one thing is for sure, we should expect volatility. That is something that I've been mentioning for quite some time during this bull run and even before that. There's a lot of factors that come into play with regards to the silver market that can move the prices one way or the other. In fact, the least cause of silver's price movement in this latest version of the bull run is the dollar. The dollar really doesn't have much to do with silver's price moving as much. It's more about getting silver to fulfill some of these futures contracts at the London Bullion Market Association, which is essentially ground zero. I'm going to be referencing an article here from James Hyersik, who has been referencing and reporting on the news that is now confirmed at the LBMA. Before I get there, whenever there's dips for silver, it's a good time to buy. My friends at Summit Metals, they know this all too well, and you can check them out. They've got some great products out there and excellent customer service. So next time you're in the market to buy, or if you need to sell some of your stack, contact Summit Metals. Link is in the description below. Now, we did see silver's price drop dramatically in the last trading day, and again, we don't know what's going to happen from here on out, but this sharp move triggered the prices breaking below key pivot points and below that $50 mark. Will we see it recover to that anytime soon? I don't know. Could be by the time you see this video. But what's causing this? Well, one of the key drivers behind its recent surge in price had been a liquidity squeeze in London, where physical supply had grown tight and borrowing rates soared to record highs. They were very, very close to one of the biggest squeezes we've seen in the London Bullion Market Association. But a significant wave of metal shipments estimated at over 1,000 tons arrived from the United States to China over the past week. According to traders, between 15 and 20 million troy ounces of silver were flown into London, an unusual move typically reserved for gold due to cost. But indeed, they're flying them in. I've been reporting on that has been happening, but now we have numbers that we're starting to see that 1,000 tons has arrived. That's a pretty big deal. This influx has alleviated tightness in the world's largest over-the-counter precious metals hub, easing both the spot price premium and the short-term borrowing rates. Morgan Stanley estimates more silver in London vaults remains tied to ETFs, but the short-term squeeze has clearly softened, at least for now. Now, I'm going to show you a piece of silver I bought at my local coin shop, and there's going to be some lessons we can learn from my purchase that I got here recently. So stay tuned for that, and I'll tell you the story behind this piece too as well. Now, there's another thing we got to look at, not just London, but also China and India. Physical tightness persists elsewhere other than London, although London really is kind of ground zero for the bullion market, especially in the West. But China shipped 100 to 150 tons of silver out of the country last week, though not all headed to the United Kingdom. India, the world's top silver consumer, is actively competing for shipments due to festive season demand and a domestic shortage. Indian premiums have surged to historic levels, forcing increased reliance on air freight. Meanwhile, the Shanghai Futures Exchange stocks dropped by 249 tons to 920 tons last week, which is the largest weekly outflow in 11 years. In the United States, 697 tons have exited COMEX warehouses since early October, pressured by tariff-related uncertainty. And if there wasn't that uncertainty with tariffs, we would not be in the situation we're in right now, where silver prices have reached record nominal highs of $54.50. But now it sounds like things are coming back together. Now, with technical support levels breached, profit-taking accelerating, and a significant easing of the London squeeze, silver is facing renewed downside pressure in the short term. While long-term fundamentals remain strong, short-term sentiment has turned bearish for now. And again, who knows how long that will last? I don't know what the prices are going to be by the time you see this video, but nonetheless, one thing is for sure, be prepared for more pain in the silver market before things get better, and I think they will. And we just got to kind of watch what happens. Now, the Federal Reserve is going to be meeting next week, and a rate cut could help stabilize prices, but until then, further retracement towards $47 or $44 cannot be ruled out, according to the author of this piece, and that is quite a possibility. We could see $47 to $44 silver. That would not surprise me. But rate cuts are usually good for gold and silver, and at the very least, it'll buoy it up and keep it from falling much more. So I think that is something we should consider here while we watch the markets. But you know, one thing is for sure, we stack for the long term, because even though the dollar is not the biggest reason why the prices fell in this liquidity squeeze, it is a factor that's keeping it from falling too much because of inflation. This is losing value. This maintains its value over the long run. So we'll see what happens. And the fundamentals are still very good long term for silver. As we know, nobody is arguing against this anymore. There is more demand for silver than there is supply in the coming years. That's what's projected, and we've been seeing that for the last 5 years or so. And as to whether or not, the only argument now is to how much that deficit is. That's the only debate. That's good for silver. We're in a different era with silver now. It's needed more and more for everything. Over 10,000 uses that the metal has. So that's why I'm overall bullish on silver and think it's going to do well. Through this pain, we're going to have to suffer if the prices go down. But is it pain? Is it pain at all if there's an opportunity to buy? I don't think so. And I think this is something, again, we've expected some of these pullbacks through this bull run. But as long as we can hold above a certain number, and I don't know what that number is going to be or mean for you or for me, that's up for debate. In other words, how low can silver go? My guess is it's probably not much more below 40. I think 30 is a very strong number that I think is a strong floor for silver in this point in time. I find it highly unlikely it would fall below, but you never know. I think if we were going to see dips, it's not going to be much more below that. I remember when silver hit over $30 the first time recently. It dipped below to $27 briefly, then came right back up again. So we'll see what happens. But nonetheless, I am a buyer and I'm a holder, more importantly. You know, I think that's really crucial. You know, somebody had commented recently that they sold a very good, substantial portion of their stack on the dip, on the big dip that we had yesterday. And I'm scratching my head on that one. They must have had to have sold, or they sold out of a panic or out of fear. That's not how you should sell, folks. It's also how you should not buy either. You should not buy out of fear. You should not sell out of fear. You should buy with the understanding of what could happen with the prices and the overall long-term advantage of holding silver. It's a beautiful metal indeed, and the London market is certainly something that has an impact, obviously. And we're going to see how these things play out, but also the Shanghai Gold Exchange and what's going on in China. A lot of those pressures are still there. They're still with us. It's not changed. We still have backwardation. Now, backwardation could be less of a problem by the time you see this video. It could change fairly quickly. But as of the recording of this video, that has not changed either. There still is backwardation. So there's still some stressors out there that I think are going to keep prices up or keep them from falling too much further from where they're at right now. But you never know. All we can do is just roll with the punches. Now, let me show you the piece of silver that I got. Now, at my local coin shop, on the dip, pretty much near the bottom was when I went in there. They sold me high premium silver for $1 above spot, just $1 above spot. Now, this piece here, before I show it to you, has a limited mintage of 231. For silver, that's very, very low. That's extremely low for silver. So it makes you wonder, well, why would somebody sell something for that low of a price? It doesn't make sense why they would do that, considering it's a high premium piece of silver. Because rarity doesn't mean anything. Rarity just doesn't mean, sometimes mintages can be so low, too low, that people just don't care about it. And hence why I was able to get this piece for $1 above spot. That's less than what their generic bullion was going for. I think they were selling for $1.50 over spot, but I don't know. But nonetheless, this is from the Silver Shield series, brand new, minted this year from this mini mintages. Somebody had sold a bunch of this stuff, which means if they got spot for it, they were probably lucky. Probably got it for under spot. For a proof piece, comes in a display box. I actually don't like their display boxes at all. They're very hard to get the coins out. But there it is. And this is an ironic piece because there's got a picture of Fort Knox. Nice quality. The Golden State Mint produced this. It's actually a very nice quality piece. But it has got Fort Knox there, very heavy frosting with barbed wire and security. And it asks the question, where is the gold? Which is ironic because Chris Dwayne, who creates these, really hates gold. Talks smack about gold. Why does he even care? And that's what I want to know. Why would he even care where the gold is? But nonetheless, I think it's a bigger question about government secrecy and the like. But there that is. And so good question, though, for most of us. Where's the gold? And maybe it's another topic for another video, which is a good reason for me to get this, especially for a low price above spot. So this thing here holds pretty much no collector value unless I was to sell it to somebody who collects the mintages, which, by the way, you can create too much of a mini mintages to where people are just going to give up collecting it. I don't know of anybody that has all of these. I know some people who've sold off a whole bunch of these that got it because they realize, they're just going to be thrown into the junk bins, essentially. And that is the case for a lot of collectible silver out there. I should know. I have a lot of it. But I never buy it with the intention that I'm going to make money on it. I buy it because I enjoy it. I got this thing for a deal, but certainly would not expect to get anything more than spot price for it if I was to sell it back to my local coin shop, unless I was to sell it to somebody who really, 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 really wants it. That's the only other way I can make money on it. But there you have it. Another ounce of the stack. And another interesting time in the markets. Let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.